Hi there, welcome to GrainTV. It's Wednesday, January 27th. I'm Kevin McNew, and let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn finished the day completely unchanged, while beans was up 6.5 and wheat losing to the downside, a whopping 8.25-cent loss. News today out of Argentina. They have booked a deal with Egypt to sell them wheat for the first time in 3 years. That comes after Argentina's new president eliminated wheat export taxes and also let their currency float, which caused a 40% drop against the US dollar. So that opens the door for yet another major competitor in the wheat market at a time when US wheat business is slow enough to begin with. Other news out of Argentina, they are starting to see dry weather patterns in some of the key growing states of Buenos Aires and surrounding provinces. The next week looks especially dry, but once we get past that, the weather outlook calls for better chances of rain. That's 2 weeks from now, so there's still a lot that can change in that weather outlook, and right now the market's not overly worried about it. It is a rather sizable portion of the area, about 40% of Argentina's production, but it's still quite a bit of ways, and we're not too concerned about it at this juncture, but it is something worth monitoring. In global news, we had the Fed announced no change to interest rates, not a surprise there. And in their policy statement, as usual, they said they are closely monitoring the markets and the conditions of the economy, even after last month's big sell-off in the stock market in China. They continue to see fairly positive economic stimulus in the U.S. Other news out today, ethanol numbers from EIA were off by 20,000 barrels per day, reaching their lowest weekly total since November. And in corporate news, we have Abengoa, who has been going through bankruptcy in the last few months. They announced that they will be selling all 6 of their first generation or corn-based ethanol plants in the U.S. So that is at least at a domestic level, potentially concerning what will happen with those 6 major ethanol plants. There's one in Illinois along the St. Louis area, in Indiana along the Ohio River, and then some out in other key states. So, that's something to keep in mind as we look at ethanol margins. And in particular, if we compare them to last year, we can see we're off quite a bit. Last year's margin at this time was about $1.30 a bushel, and now we're around 98 cents a bushel. This just based on the raw product prices of corn, ethanol, and DDG. If you look at sort of overall profitability, analysts are suggesting that plants are seeing 20 to 30 cent a bushel loss on current prices. So that is not favorable for the ongoing struggle that ethanol has. And when you look at the potential for weaker DDG prices, if China does indeed cut their imports of US DDGs, that could potentially be another nail in the coffin, if you will, in terms of ethanol production. On soybeans, let's take a look at soybeans. We had a big jump up here towards the last hour of trade, driven mostly by soy meal, which has seen an underlying current of firmness in the cash market. So we got some short covering in soy meal that got soybeans up into that upper end of the range. We have been locked in an 870 to 888 range since that USDA report back on January 12th. And today we did get up into the upper end of that range, closing near the highs around 884. So it'll be interesting to see, can we clear 888 and potentially make our way into that $8.95, $9 region, which will also prove tough to clear in this type of environment. That's all we've got for today. Tomorrow is Thursday. There will be no export sales report because of Snowmageddon in DC that has shut down the nation's capital. So the export sales report is postponed until Friday. Have a great day. If you have any questions, give us a call at GrainHedge 877-472-4607 or visit us online at grainhedge.com.